Well, we really appreciate being here today. Jennifer Sid and Tracy, thank you for organizing this, and for the Louisa Chamber and everybody that's involved and all the speakers before. Great information. I think this is a great concept, great idea, and I know this next topic might be one that you're not as familiar with, but some of you might have more experience than others. But I tell you, I'm just excited to be here in person, to see some real faces. This is the first time I've actually had a in-person presentation, probably for 2 years, I think. And I was reminded of that this morning because this is like my third shirt, and none of the top buttons were closing. So I was like, man, all my shirts they're shrinking, you know? And I was like, well, maybe not. Maybe my neck's growing a little bit. But I tell you that in case you're in the front row. If you see any buttons flying off, just beware. I think it is, like Tracy, like you said, this is an important topic. Today we're not going to dive into the weeds too much, but at least give you enough information where you feel more comfortable using the form non-nondi. I'll start off with just a little bit of an interesting fact. Now, that's from an accountant, so take that with a grain of salt, an interesting fact, but this is actually the 80th year of the non-nondi. So this is the 80th anniversary. So 1941 was the first year that the form non-nondi was released. It was, anybody want to guess how many pages it was in 1941? One was, great guess, it was 2 pages. It would have been cooler if I could have said 1, but it was just 2 pages. I was looking at one of, going to GodStar, and I just typed in American Red Cross because I knew that, they're a huge nonprofit, and theirs is about 70 pages. So, it's developed quite a bit. There's 1.7 million nonprofits that are registered. We talked about earlier, nonprofits is a huge segment of the economy and the social impact. Before the Republic, back when we talked about volunteer associations and the settlers, they were doing this. They didn't have to follow non-nondi, but it existed. So. I'm Travis Simpson, as Tracy said. That's about all that there is to say about me. I don't need to spend a whole lot of time on it. I've got 2 daughters, one 9 and one 7, so I used to have hobbies. Maybe again one day. But I keep busy with them. But I do work a lot in the nonprofit area. I started in 2002 with Hanson Weeble, and from day one, I pretty much came in doing nonprofit work. And Hanson and Weeble, we've been around over probably 95 so years. So we've kind of grown with the community, and there's a lot of nonprofits within the region. I know Louisa has a lot, Charlottesville has a lot. So it definitely a developing sector, and it continues to be. So today I'm just going to kind of start a little bit with just hitting some of the big objectives, give you an idea of where we're going. So I think it is important we understand the purpose of the form non-nondi. Obviously, you have to follow it with the Internal Revenue Service, and following that, make sure you keep your tax exempt status, because they look at it as being a privilege. So they're not going to let you get away with not filing anything. I think an important part of the non-nondi is actually understanding who uses it. Just a quick question for everybody: does everyone know that the non-nondi is publicly available, so you can go out and anybody can look at it? So a lot of people don't know that. I mean, even some folks I talk to, it's like, oh, well, take our compensation information out. I don't want the board to see it. I was like, well, the whole world can see it. So, it is a very transparent document. We'll talk a little bit about the filing requirements and talk about the different forms and the thresholds, the dollar value thresholds, because there are different types of non-nondis. Then we'll talk about the structure of the form non-nondi. And I know a lot of you might be filing a non-nondi EZ or even a postcard maybe. So I'll try to highlight some of the non-nondi EZ information as well. And then we'll highlight some best practices and preparation tips. Even though you might not ever prepare a non-nondi, or you might not have any interest in preparing a non-nondi, if you're reviewing it as a board member, if you're talking to your board, if you're talking to donors, And just going out and looking at other organizations that are similar to yours, and you go out to GodStar and say, hey, what are they doing on their non-Nandi, to present it, to tell their story in the best way. So we'll hit on that, and then I have a slide just for some non-Nandi resources, and there's a bunch of them out there. I just put just a one pager out there. So okay, so what is it? That's a good one to start with, right? So it's not really a tax return, okay? So they call it an information return. So when we say non-Nandi, it's informational, and I underline in public disclosure because that is important, just to let everybody know this is out there for the public. It is filed on an annual basis, and it's required to maintain your tax-exempt status. There are a few types of nonprofits that don't have to file a non-Nandi. Churches, religious-based organizations is probably the best example, but there's other ones. Some government institutions don't actually have to. But so the reason the return is so long now, in 2008, the IRS decided they wanted to redesign the form. And when they did this, they had three main objectives for doing it. One was transparency. They want to make sure that everybody can go out and look into a nonprofit and see, how are they governed, what type of policies they have in place. So it's more than just your financial information that you would think about on your standard individual tax return that you would do. Compliance, obviously, is easy, and that IRS is looking at it for compliance. One little quick comment on that. One of the sessions I attended last June for one of the national conferences, in the past, there's this thing like, if you're American Red Cross, if you're a huge organization, Salvation Army, you're more prone to get audited because of the size of your entity. But now it's evolving a little bit more. So what the IRS is doing, they're looking at actual diagnostics and big data. So just to give you an example, one of the questions on the form is, do you have a conflict of interest policy? So if you say no to that, and it's okay, I mean, it's not best practice, but but you can say no on the return. But then you also have a related party disclosure that you put on Schedule L. I've heard that could almost be an automatic audit, because they're actually taking information and using it and being looking at it from an analytic perspective, because there really is so much information on the non-Nandi. A lot of people say, how could the IRS even process this information? There's so much. So they're using technology to help them. And then the last one is just accountability. Accountability to your stakeholders, to donors, basically to the general public, and the funding sources. So. Oh, sorry. I had the worst timing. No, I rambled for a while, and then yeah. Sorry. Okay, so we talked a little bit about this. Obviously, the Internal Revenue Service is a big user of it. I think donors and grantors is an important one to talk about today, and some of the tips and practices is really kind of geared more at actually making the non-Nandi more of a fundraising tool and an opportunity to actually present the organization in the best light that you can. Potential board members, if you're trying to onboard somebody, it's everybody just goes to the internet these days. So if they're on and they want to look at the non-Nandi to see, how the organization is run, obviously the financial information is on there as well. But it's more than just revenues and expenditures when they're looking at it. And there are some charity watchdog groups out there. Charity Navigator is probably one of the bigger ones that I can think of. GodStar says they're not really a watchdog group. They're there to provide more information, but they do have some seals, like a seal of transparency, and they go from like bronze up to platinum. That's mainly based on how much information. That's a transparency type of thing. So they're not looking at your program expenses and how much you're spending for every dollar that you spend, how much goes to program. But we'll talk about that a little bit later. Banks and creditors may also use it. We don't see a whole lot of nonprofits that have a lot of debt, but it's certainly possible. And then I don't know how many of you actually follow your state solicitation with Virginia. It's like the Form 101 or Form 102, I think. There's information that they use off the non-Nandis as well. So. Okay, so some of the things, some of these are pretty obvious. I've already kind of talked about them a little bit. when a user's looking at the financials, everything that the fundraising folks had here, that were speaking today and offering the grant programs, look at that as like, well, that could be your audience. So they want a clear and compelling message. They want to know exactly what you're doing. Any type of non-financial information, like impacts, how many meals did we serve, how many patients did we serve. That is all information that we like to see in the Form Non-Nondy, so the public can see it too. And I'll give you some examples of some good narratives and maybe some that are a lot better. But there is sections on governance structures and policies. So I talked about conflict of interest policy, but there's also policies for whistleblowers, record retention policies, things that maybe if you don't follow Form Non-Nondy, maybe you're like, okay, I don't follow Non-Nondy, so it doesn't matter. But hopefully it'll still be beneficial to you, because these are good practices to put in place, regardless if you're following a Form Non-Nondy. It's just good governance practices. One of the things that the watchdog groups tend to look at, and sometimes too much, is the breakdown of for every dollar you spend, how much is going to program, how much is going to management general, and how much is going to fundraising. So we'll talk a little bit about that, and also using the narrative to help explain changes that occur from year to year. Sometimes we do with smaller nonprofits that are just starting up, and they're spending a lot of money on fundraising. But when you look at the Non-Nondy, it doesn't look all that great, because you're 60% fundraising. And GodStar did partner with a couple other organizations to put a white paper out there that basically says don't over rely on that program expense percentage, because you might have things that change. So if you're in a capital campaign year and next year you're not, you would expect your fundraising expenses to go up. So the key takeaway is you have to be honest. Like, you want to have a level playing field, and not all nonprofits probably are honest when they're doing their allocations. We like to think that ours are, and we do look at them for reasonableness. But we'll hit on that just a little bit more. And then there are disclosures with compensation. So officers of the organization, their compensation is out there. It's right off the W-2. Any type of health benefits, retirement benefits, that's all reported is compensation. And the IRS is also interested in professional fundraising arrangements. So if you're using a professional fundraiser, they want to know what that arrangement's like. Are they retaining some of the funds? Is there like a agreement where they're taking 10% of the funds? There's so many reasons that a user could look into the Non-Nondy. Even if it's just looking at one line item on the form, just going to be like, okay, I want to benchmark how much your organization is paying their executive directors and officers. All right, I think we're good for the next one, Tracy. Okay, so this is just a little quick chart. Give you a little bit of a reference. So if you have gross receipts that are normally less than $50,000, you can actually follow a Non-Nondy in, which is just the postcard. And this is, we do some of these. I actually don't do these personally, but I'm pretty sure it's as easy as going to the IRS website. You could probably best is to Google Non-Nondy in postcard, and IRS will come up. And you can actually, I think you have to create an account to do it, but it's just click a little hyperlink and you go right to completing the postcard. Don't think there's much information on it at all. You're not going to get into your governance questions and everything on the. So the IRS is merciful in some ways. So the Non-Nondy EZ is if you have gross receipts that are less than $200,000, and this is a big and, so you have to have both of these. You have to have total assets less than $500,000. So we do have clients that fall into this range as well, and there's a lot of Non-Nondy EZs. I think it's a 6-part form, and it's a four pages. So it's only doubled since 1941. There's still a lot of information on that EZ, so I would say it's not quite easy. Maybe we could put an R on there and be like easier. I don't know. That doesn't work, does it? But it's a little bit. It's definitely different than the Non-Nondy. The Non-Nondy's got a lot of information, and so obviously, if you don't qualify for the EZ and the Non-Nondy N, you have to do the full Non-Nondy. I don't know if we have private foundations. on the call today or through Zoom, but they actually file a 990 PF, so I'm not really going to talk too much about the 990 PFs. Okay, so the filing due dates, this is important. So it's due the 15th day after the 5th month. So if you're a June 30, which a lot of our nonprofits are June 30, that would be a November 15th deadline. You get a 6-month automatic extension if you can't meet that deadline, and so that'll take you into May 15th of the next year. The form that you use is 8868. I just do that in there in case you do need that extension. If you're up on 10 o'clock, 11 o'clock one night, figure out you didn't do your 990, go to that form, and, well, post office is closed. I don't know, but we'll talk about penalties next. So penalties, they used to be a little bit steeper than they are now, but if you do have less than 1 million in gross receipts, it's still $20 a day with a maximum penalty equal to the lesser of 10,000 or 5% of gross receipts. So it could climb up there. The organizations over 1 million, that's $100 a day. So up to a maximum of 50,000. Here's an kind of interesting part though, is if you file the 990 or the 990 EZ and you know we got it in right, if it's incomplete or if you haven't completed all the required schedules, the IRS can come back and say you actually haven't filed a return yet. It's not complete, and they can technically assess penalties for that. So even though you think it's filed and done, that's probably a bad scenario. Most of the time, I would think you'd be able to get an abatement for that. They might, you know, if you did that on a consistent basis, after a while, they're probably not going to relieve those penalties. But that's just something, you know, this wasn't one of our clients, but I've heard this story a few years ago, and the 990 was completed for this organization, and they gave it to the office administrator to mail. It turned out that office administrator, guess, didn't understand what it was, threw it in the desk drawer, never filed it. And it took quite a while for the IRS, you know, to send them a notice, but the penalties were close to 7,000-8,000 by the time, and I'm not quite sure. I don't know if they tried. I'm sure they tried to get out of those, but it can happen. So, okay, I think we're good for now. I'm sorry, I'm probably blocking your way. I'm probably not the best window. I'll move up a little bit. Yeah. So the consequences of not filing, obviously, the penalties for filing late, but if you actually don't file a return for 3 consecutive years, and that includes the 990N postcard, this is not a slide you want to have to focus on, because the IRS will actually automatically revoke your tax-exempt status at that point. And I know it happens, and I know it happens automatically because we had a individual call last year, and it happened to them. And they actually thought that they were working with an agent about an issue on the return. We're thinking they didn't have to file it, but this notice kicked out automatically and basically says, hey, you've lost your tax-exempt status. And you don't want to be in that spot, because then you're talking about going back to get your Form 1023 application redone. So don't do that. So if you get anything away from this, file your 990. Don't let it lapse. And 3 years comes around fast sometimes, but hopefully you're doing it every year. So the part of the 990 I just want to hit a little bit. It's a 12-part form. It's what we call the core form. The Schedule O is kind of where I kind of want to highlight some information on the narrative, because the Schedule O is basically an open-ended supplemental. You can write whatever you want to on it. There are certain questions on the 990 that you have to have a response on the Schedule O, but you could put in there. Best example I was thinking of. On the fundraising side, if your fundraising is up this year, just, hey, during the year we embarked on a capital campaign, which required, substantial initial fundraising cost, something to that effect. Okay, I think we're good here. So I was going to read line by line the 990, and Tracy was like, I don't think we should do that. Like, I think we have to tell them how to prepare. So this is just a quick summary of each part of the 990. So obviously, the part one, if you look at it, it's a snapshot of what the IRS has basically determined what they think the user would want to see if they just looked at it for 30 seconds. So there are a couple things on there, like the mission statement on page 1 that's front and center. Fundraising cost is on page 1. So obviously, they're trying to highlight the fundraising aspect. Part 2 is the signature block. Nobody probably really stays up late thinking about this, but in case you're wondering, the person signing the return should be the current officer. So even if you have a new treasurer that came on for the year, even though they weren't there for that prior fiscal year, the instructions say they should be signing the form, which kind of makes sense. They are the current treasurer, but that comes up sometimes, so I want to mention it. Okay, part 3, we'll talk a little bit more about in the tips and tricks, but this is kind of where you explain what you've done for the year. And I see a wide range of explanations from provide education, period, if you're a school, which is not, you want to do more than that, right? So we'll show you some examples of how you should elaborate on your program services. Okay, part 4, we kind of refer to this sometimes as like maybe the trigger questions. So you have this part 12 core form. If you answer yes to any of those questions in part 4, you have to do additional schedules, and that's how it gets to be a 70-page return. So those schedules, some are required for everybody, but if you didn't get any stock gifts during the year, you might not have to do that schedule. So it just depends. And it can change every year, so you can't just rely on last year. Part 5 talks about some statements for the IRS, like how many W-2s did you file, how many 1099s did you file, and there's some other compliance-based questions. Part 6, this is where it gets into the good stuff. Governance, management, disclosure. It's going to talk about all your policies. Is the board taking minutes? Questions that are pretty detailed. Compensations in part 7. All the directors are listed in part 7 with compensation information. Statement of revenues, statement of functional expenses, which we'll talk a little bit about, and then the balance sheet, which obviously we love as accountants, the accounting equation, assets minus liabilities equals your net assets. And then reconciliation of assets, I won't talk much about that. That's more of a preparation thing, but there are some things on the non-90 that you would not report. So if you get a lot of donated services, you're actually not calling that revenue on the non-90, but you do reflect it in this reconciliation, net assets, and financial statements and reporting. That's questions about, does your organization actually get a financial statement audit? Do you get a review? And I think some of these watchdog, that's pretty cool. I can start singing to that. Maybe not. That's like when you're like at the Oscars and they start playing you off, with the the symphonies. Okay. Yeah, so I think the financial statements and reporting. I think a lot of watchdog groups are looking at that to say, okay, are you getting audited or not? And obviously, that's a cost-benefit question for a lot of nonprofits to have the resources to spend on getting a financial statement audit because it's a lot of work involved. Okay, the non-90 easy. I already said this. It's shorter, simpler, 6 parts. There are some additional schedules, but I put the ones that are not applicable. So all the other ones are applicable. Those probably don't mean anything to you. I was kind of hoping maybe they'd spell something so it'd be cool, but I couldn't get any spelling out of that either. So, but yeah, those you for 990 easy, you do not have to complete. So I just talked about non-cash gifts. That's Schedule M. So if you're a 990 easy and you're getting non-cash contributions, stocks, artwork, whatever it is, you actually don't have to report that for a 990 easy. So here's the common additional schedules. Schedule A. Which is a very important schedule, and you could probably spend 4 hours probably in a session just going through how you calculate the public support test. Is anybody aware? Do you have any insight on this public support? Have you or questions that you've seen? I can explain it a little bit. I won't get into it too much, but basically the IRS says if you're going to be a tax exempt entity, you're going to have to raise funds from a broad spectrum of the public. If you've raised from a concentrated amount of individuals, you're really not a public organization. You would default to a private foundation status. And when you're a private foundation status, you have to pay tax. There's complicated rules with how you calculate that tax, but You want to keep in that where you pass that support test. And it's a mechanical calculation. And how it works is you have a numerator and a denominator. It's just an equation. But you have to prove that at least 33.33% of your support comes from the general public and not just from concentrated individuals. So, yeah, and you have a question? Do you
yeah. So do you mean like it has to be like selling tickets for a raffle, where you're engaging the general public, not just all your funding is from grants? Is that what you mean?
Yeah. So I'll step back on that just a second. So, usually this is a contribution-driven type of calculation. So what you're going to do, I'll give you a really quick example. Let's say it's a 5-year test. Okay, so you look at it for 5 years. So you really should never be surprised if you don't make the public support test because you have an idea. But let's say you have $100,000 as your total support for those 5 years. What the IRS is, and this gets just have to hang with me here. They say, well, if you have a donor that gave more than 2% of that total, so more than 2% of 100,000, so it'd be $2,000. You cannot count that excess in your public support. So, as an example, would be somebody gave $50,000. Okay, so $50,000, $100,000 total, right? Follow me there? And you got $100,000, so 2% of that's $2,000. So anything over $2,000, they say you can't count as support. So that's going to be $48,000 that you have to remove from the calculation. So your numerator is going to be reduced. So basically you're going to say 100,000, we can't count 48, so 52,000 is what we can count divided by 100. You're at 52%. So you're fine, but once you drop down to 33% when you do that calculation, it gets kind of messy because there is a way you can do a narrative to get out of that. So if you're between 10% and 33% on your test, there's a facts and circumstances type of test, and you can put the narrative in to say, hey, we are publicly based, we are soliciting, we're doing these things, and we've done that for a couple of nonprofits. We usually try to steer away from that. And hopefully they make it above 33. But then it gets subjective. So the IRS can come in and say, yeah, you wrote that narrative. You said you were between 10 and 33, but we don't agree with you. So X, you denied. So you really want to stay above the 33. But that whole calculation, and if we have time, we can look at it more. But it is very mechanical. But just know, like, as you're thinking about it, if you do have somebody approach you and it's a big gift, and you're thinking about that public support schedule, there's one thing I haven't mentioned yet. There is a concept of unusual grants that the IRS says if you ever get something that's so large and unusual, so a bequest is a great example. Somebody leaves, in their will. You weren't really expecting it a lot of times. You can go in and put that as an unusual grant so it does not get counted against you. You just don't want to do that every year because you only have so many things. If you call everything unusual, then they probably won't buy off on that. Yeah, please.
My question is, okay, I understand if John Jones gives you a check, he's an individual donor, but when you get a grant from, say, like Dominion or Rappahannock, is that grant considered the single donor for the purposes of this public support test, or the fact that their money comes from a whole bunch of people change the equation?
Yeah, great question. That's a great question. So you really do look at the legal entity. A lot of times what comes up is donor advised funds will give. So like CACF, you get a grant through them. You would look to the actual the organization giving you the funds, and that would be the donor that you would count. Now when it gets confusing, and this does happen sometimes, you have related party transactions, right? So you have a donor, let's say, they give $25,000 through personally, and they have a company, and then that company gives $25,000. There are affiliation rules. The IRS says you have to combine that and call it a single donor for purposes of the public support, which goes against the nonprofit. But as long as it's coming from a separate organization like that, and you don't have any type of ties, you didn't have somebody on the board like making that decision, you're fine to segregate that out. It's a great question. And the other thing too is, this is important. Like if you get a grant from another 501c3 that is publicly supported, that you actually don't have to count them. You can exclude them as being a excess contributor. So they give you a little break on that because they say, well, they've already passed their test. So if they flow through to you, they're not going to ding you for that. And you can, so if you want to find out, you can go to GodStar, right, and actually look it up and say, are they publicly supported? Because some of the organizations that are giving you funds they're not doing a Schedule A. So if it's a private foundation giving you the funds, they're not publicly supported. So GodStar would tell you, you could go right to that organization's Schedule A, see if they complete it and pass it, and then you can exclude them. That's probably a long-winded explanation, I'm sorry, but
Yeah, I'm just gonna chime in, because I'm sitting here like, oh my gosh, blah, 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 blah. Question.
that's what happens a lot. Yeah,
and
yeah.
I don't wanna take up the time on that, but
Sure, yeah.
what I would say, as one nonprofit person to another, make sure you got a good accountant that knows and understands this, because, I'm like, oh my gosh, my accountant doesn't ask me about those things, and how am I reporting that? So, that's one of the main reasons why we have him here today, so that you are thinking about these things that you might not have thought about. I've been involved with nonprofits for a long time, and I get phone calls all the time, especially at the chamber. Hey, I want to start a nonprofit, and people don't always internalize what exactly that really means. So that's the point of this. Sorry.
Yeah, no, that's great. Thank you. And that is the most complex. I mean, the Schedule A is a complex schedule, so I don't want to overwhelm you there, but it's an important schedule. And a lot of times, like a lot of our clients are like 98%, so you might not know about it because well, there's no issue here, but it's good to know about it. So I think we can go to the next one, Tracy. So just getting into a little bit of tips and best practices, and really this information I try to put if it is non-NANDI or non-NANDI EZ specific in parentheses there. That's probably a little hard to read, but this is just an example of the first page where it talks about the mission statement. They don't give a lot of space on the form to complete. So sometimes you'll just see Schedule O, and for explanation. We see that sometimes too in practice. But really the better explanation would be in that short description that you do have there. This example is care for the homeless and those at risk of becoming homeless. So at least it gives the reader right off the top, they don't have to go back to the 50-page document and try to find out what you're doing. So I would recommend thinking about that. The other thing that gets missed sometimes is there's a question about volunteers, and a lot of times, we didn't have any this year, although it doesn't happen too often. But your board members, as long as they're not paid, are volunteers. So you should have at least your board members reported. So I just want to mention that to everybody. Okay, part 3 is the program service accomplishment, and it's part 3 on the non-NANDI EZ as well. So they line that up. An ineffective description is on the left. So we've just said, provided funding for basic needs of our clients. Effective program description provided approximately 1 million meals to over 25 partner organizations located throughout the region and over 6,000 children with new backpacks. That's much more effective. And a lot of times we see that folks, they just don't put the word, it rolls forward every year. Nobody's really looking at the actual narrative on a lot of the non-NANDIs, and we try to help as accountants to give the suggestions, but it's really the entity's non-NANDI and their narrative that they come up with. So, checklist of required questions. I would just say on this one, again, it's important to review each question or use an accountant if you have one. A couple of things that might trip you up. We see sometimes is foreign activities. I don't know if anybody in here would be doing foreign activities or not, but it's not just foreign activities too. If you have an investment in a foreign partnership, you might have extra filings you have to do. It triggers other filings. Some of those penalties for not doing those forms are $100,000 a form. So if you have any foreign transactions, reach out to your accountant and let them know what you got going on. Policy section, this is just, I got a resource at the end. It will give you a policy book that I think would be helpful for everybody if you want to go out and adopt some policies and kind of harvest a bunch of other examples. but the ones that are listed, these are best practices that the IRS said, hey, we want the public to know about these. So conflict of interest, whistleblower policies, document retention, and executive compensation review. And part of that too is, do you actually benchmark your executive director compensation? Do you use other, how do you come up with it basically? So the detail on that can be pretty I guess, well, it's important, we know, but it varies from organization. Okay, so compensation and board member reporting. I'll be kind of brief with this one. So I would just say this is important information. It's very sensitive information. It is out there to the public. You can't hide it. You can't say, oh no, I'm not gonna. I don't want you to put me on there. You have to be reported. But I'd also say to check board member spellings. I'm really paranoid about this. We do the returns and we present them, and I feel like the board members go right to their name and see if it's listed, So you don't want to upset anybody. So just be detailed with it. Make sure you feel comfortable with it. And the one thing that's kind of changed recently, sometimes you have boards that are, 30, 40 board members, so the compensation would get down at the very bottom. So you'd actually have to go back to the Schedule O and a couple pages to see it. The IRS has said, no, you actually have to put anybody with compensation first on the list. So they're not going to let you try to bury the compensation below. And I should say, just real quick, in some cases, you could have somebody look at it and actually be negative if you're not paying somebody enough, right? Like if you're not trying to focus on retaining leadership and talent, it could actually work that you're paying somebody too less. So it kind of goes both ways. So, okay, this is best practices, program service expenses, management, and fundraising. This is the section that it gets a lot of attention. So every dollar that you're spending, where is it going? And this is not non-90 related really, but if you have, I don't know if you use QuickBooks. Maybe you don't have QuickBooks. Maybe you're using just an Excel schedule right now. You don't have the volume. I would recommend at least something like QuickBooks. Make it easier for yourself to set up your chart of accounts and to set up your like QuickBooks has class codes, right? So you can actually say everything that I spend, I want this to go to management in general or program or fundraising. So at the end of the year, you don't have to go through and filter all of your expenses and say, okay, we had office expenses of $10,000. How much was fundraising? How much was management in general? How much was program? That's a pain to do. So if you can try to think about that and structure it. Now the 990EZ, they don't break it down like this, but you might have funding sources that want to see it. And I think the state solicitation form for Virginia actually asks for fundraising expenses. So you can't. It's like you can run, but you can't hide type of thing. So evaluate, just evaluate the allocations carefully. Hopefully there should be some type of methodology. So depreciation expense should be like square footage. Utilities should be square footage type of allocations that you have a method for using. So, and try to avoid the miscellaneous expense. We see sometimes just all these expenses and then miscellaneous is like the biggest expense. So other tips and practices. This is just talking about Schedule O, and I won't go into this too much. But basically, if you're thinking about it, if there's anything you want to get across to the public, tell your story. So you have to fill out something on the return that you're not quite comfortable with, or maybe you don't have a conflict of interest policy at the end of the year when you do the return, but you have one in process and it's being approved. You can go to the Schedule O and say, as of this date, a conflict of interest policy is pending approval. You do have to have those policies in place by the end of the year to check yes. You can't do them after the fact. Okay, this is important. Never put any Social Security numbers on the Form 990. It's open to the public. And Schedule B is the one form that actually is not open to the public. So Schedule B has information about your significant donors. So you're going to get their name, addresses, and what they gave. I was helping one nonprofit last year, and I was looking at their website, and I went to their 990, and bam, Schedule B was out there. And so I try to call them, hey, you want to take that down because you really don't want that information out there for everybody. So just kind of make sure that you delete that from a PDF if you have one. Okay, and using other 990s for benchmarking through GodStar. I mean, I think that's a great way to look at how other organizations are doing things. here's some just quick resources, and I promise you guys are so great. You hung in there. Nobody's got up and left yet or anything. We don't get a captive audience that much to talk about what we do, so it's exciting. But actually, you talk about IRS instructions. Sometimes they're really complicated. The non-90 instructions I find that actually are relatively user-friendly. They're pretty detailed, but there's a glossary that defines terms. It defines program expenses, management general, compensation. So I would definitely, you can just Google that Form 990 IRS instructions. One thing I did want to point out, and I'm pretty sure that link is right. I tested it. BoardSource actually puts out this nonprofit policy sampler book. It's like $80, I think, and it has a lot of policies. So not just things we've talked about today, much more in depth. Financial policies, how you manage reserves, your endowment, if you have endowment, or just your investment spending. Pretty much any policy, you can think of, it's in that book. And then GodStar, which we probably won't have time to actually log into because I rambled too much. But if you go out there, you can create an account free of charge. To see the non-90s, you actually have to have an account, but it doesn't have to be paid. There is a premium subscription that allows you to go deeper and actually get non-90s from inception of the organization. If you want some weekend reading or something, you want to go back those many years. If you have the basic one, it's just 3 years. So the public, if they don't have the paid one, they can see the last 3 years. Now the IRS website, I was checking that out a little bit yesterday. I think you can go back 5 years on those returns, so you can actually get the returns from that website too. There's also a determination letter, and I learned something new. It's a great thing about public accounting. Every day you learn something new, and you can look up determination letters. So if you lose your determination letter, hopefully you won't. But if for us in public practice, if we ask for it and they can't find it, I actually looked one up of our clients and it was there. So I didn't realize you actually could do that. So I think, let's see.
Questions?
Yeah. Oh, you have questions? Okay.
Yeah. You can find that determination letter on that same website.
Yeah, that IRS one that I looked up, the client that I looked up, no, I don't know if I just checked one, but it was there. So you just have to drop down and sort by determination letter, because there's 5 things you can sort by. One's non-90s. The other one's like determination letter, and then there's a few, the automatic revocation of yours. Hopefully you're not on that list.
The source was in 1993, and I tried looking for it. It's just tattered, so I wanted a new one. So
I would try it. I can't guarantee it would be there, but it's worth a shot, because you can request one too, but you have to go through the process through the IRS to do that.
I have 2 questions.
Yes, sir.
You have a 990 easy,
Okay.
and you have your Schedule D.
Mm-hmm.
You file a Schedule D, and what limits? I mean, somebody gives you $25.
Yep,
Somebody
yep.
gives you $2,500.
Yep.
What do you have with them?
Yep, great question. So there is a calculation for that. So how it works is it's the lesser of 5,000 or 2% of your total contributions. So if you're $100,000 total contributions, you take 2% of that, you're at 2,000. So 5,000. Actually, you know what? I said that wrong. 5,000 is going to be the higher of that. No, it'll be the lesser of that. No, higher that. Yeah. So 5,000. You wouldn't have to report anything under 5,000.
The other question is, how much money, you don't spend your money, like, for instance, last year with COVID, we couldn't start any schools, and it cost us about between $5,000 and $7,000 per school. So we've got money building up that we plan to use it. But how long can you keep it, the amount of money?
Yeah. No, good question. So one of the big benefits, we talked about the differences, we talked about the private foundations a little bit. They do have spending rules. They have to spend out so much money. There's actual calculations for that. As long as you have a publicly, a 501c3 publicly supported, the donor might scrutinize it, but the IRS can't come in and give you a penalty for holding on for endowments or investments or cash. We do some pretty large nonprofits, and one's getting close to $1 billion in endowment. And so you can look at that and be like, maybe they should be spending that money. But there is nothing that would come. They would come back and say, "Oh, you've got too much." No, and you had that question earlier of raising too much, and I think maybe that helps a little bit. Like, and maybe that's why you put in a reserve policy to say, okay, if we get this money, this is how we're going to spend it, and we're going to invest it, or we're going to maybe you don't want to be too risky with it, especially if it's donor restricted money. You got to be careful. Yeah. Okay. Yeah. No, thanks. Yeah.
Questions?
I was just using an organization that I work with, their 990 EZ yesterday, day before, to fill in some blanks. A grantor asked what was our statement of our mission, not mission, but the operation that we were asking for funding for on lines 28, 29, and 30. Okay.
Yeah. Okay.
I'm reading those things, and it was so cryptic, I could almost not understand what they were trying to express. What I'm hearing you say is that those explanations on the 990 need to be elaborated a little better, because somebody's going to look at that to figure out whether we match their anticipated funding goals.
I kind of skipped over that on the users, but that's a really good point. A lot of them are using it to make sure you align with what they're doing. So if you don't fall within their, and they can't tell that from your 990 because it's too cryptic or it's not clear enough. Yeah, hopefully they would call you and tell you, but some of them might not. Some of them might just keep moving and say. Yeah, exactly. Yeah, 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 yeah.
But I said what they
Yeah.
meant to say,
Just didn't say it. Yeah, and
But that's exactly the point of why we have them here, and we didn't go into too much about GuideStar. Maybe we'll do a follow-up about GuideStar with them, but that's exactly the point, is that GuideStar is a tool that a lot of these businesses and foundations are using to evaluate your applications for grants and funding and things like that. That's why it's so important to, have that information that gets fed to GuideStar, that's accurate. And quite honestly, when you were going through this, what was popping in my mind was, my gosh, if we have a really good 990, a thorough 990, then pretty much every grant that I go to write, I can just pull it right off of there, so it will save you time of not having to write and rewrite and do over. You can have a lot of your basic stuff as part of that 990.
Yep,
So,
yep.
sorry, I just offer commentary.
no, I love it.
Time.
No, it's great. Yeah.
I'm pretty stupid when it comes to all this, but I'm gonna ask a question because I know sometimes commissions are formed, boards are formed, and they get the 501c3s, and then they don't do anything, but they kind of get it there just in case they might get a donation or something. So how much action has to take place there as far as doing the Form 990, or after so many years, will they lose that 501c3?
Yeah. Yeah, that's a good question. There's definitely things you have to do, just even from just a state law perspective. You really should be meeting, and you really should be documenting your minutes, what you're meeting about. I think probably the biggest risk there, and I've seen organizations out there for years, no activity. There's nothing happening. I think the biggest risk, you talk about public support schedules and things like that. If you're not meeting that criteria to be a 501c3, and you have to revert back to a private foundation status, that gets really messy. So you can't. It's done. I know in practice it happens. Just to have it out there, as long as you keep filing the return. I don't know. I haven't known of any experiences where the IRS has came back and said, you know what, you filed the same thing for 6 years. You haven't done anything. We're going to revoke your status. I've never heard of that. I don't know if Jennifer, you've ever heard of that. So I think you're okay on that perspective. You're not going to get a penalty or a fine. But for me, it'd be kind of like if the public looked at it too. I always like, why are you wasting time? Like, with all, you do these meetings and stuff. Maybe a donor advised fund through CACF is better than a whole organization. Where you have to do these filings, and you really should be doing state solicitation filings as well, which is more work. And I don't know if I quite answered that. I can look at that a little bit more and get you some info, but I've never heard of any red flags with it. But
I just know some organizations have established a 501c3 just in case something comes along.
yeah,
And
yeah,
years and years go by, and I would think that at some point they would lose that status. But
yeah,
and I've had that question answered about 2 weeks ago.
yeah.
I didn't know.
No, it's a good question. I actually had one just real quick that I proposed on an audit, and I thought they were brand new. And then I got into it. They formed like 15 years ago, and they had this interest they had received that they had never valued, and they thought it was blank on their balance sheet, but it caused problems for us. So sometimes it's like off balance sheet stuff, like it's risky, but
So we have I'm sorry, I'll get, but some of the Zoom folks
Okay.
had questions. So first of all, Karen, basically just great speaker for what could be a dry subject, so kudos to you.
oh, thank you, Karen.
This question is from Anne. What is the definition of public for the 33% that you mentioned, and can you give more examples?
Yeah, so when you say public, it really does go back to the IRS saying, you know what, you've organized for the general benefit of the public. We can't have any type of private benefit, excess benefit. Private inurement is a word that's thrown around a lot. So if you formed and you have a specific reason you're formed, but you're just dealing with a few donors that have an interest in something, and they just want to fund that and get their tax write-off, the IRS is going to say, hey, wait a minute, you can't. We're not going to let you have a tax write-off because this really is something that's more of a gift, you know, that you'd be putting in. And so public really, when they talk about it, it goes back to, can you prove that the funding sources that you're getting is from a cross section of folks? And I'm trying to think of more examples of that calculation. Probably what I could do is when we send the materials out, I can
Yeah.
send some more information about just the Schedule A that people can read
Yeah.
a little bit more about.
That sounds great. And she had a follow-up question as well. She said, we only file a postcard, but want public to see more info about us. Is there a way to do that on the 990 reporting sites?
Yeah, yeah.
And you can unmute yourself if you need to, but are you talking about the sites like GuideStar that we're mentioning?
Yeah, there's a lot of great information for those that do the more elaborate filings. And I do know that donors and the general public look at those sites. Is it possible, or could you have any, we just do the postcards, so we don't really have any way of showing that information.
Sure, yeah. I was thinking of on GodStar's website, you actually can go in. So the information when they're doing that transparency seal, that's all information that you're actually providing to GodStar directly. So submitting your financial statements is one of the things. There's a various other, and actually if you go to GodStar, like just Google GodStar transparency seal, they'll tell you all the requirements. So I would not think you'd have any problem going on and registering an account, even if you do a 990N, and that way it's out there. So I would definitely look into doing that. I'm not sure about Charity Navigator. I haven't looked at that one quite as much.
I was just gonna say, I'm kind of under the radar of what you do because we don't make that much money to worry about it. But to try to answer Willie's question, I filed the postcard every year, the 990 postcard, and it doesn't ask anything about money. It just asks, are you making less than $50,000 a year, basically? And if you make zero, you don't have to give them a dollar amount. You just say, yes, we had an income of less than $50,000. still gonna be a public charity? So those are the kinds of things that go through my head. Now, I think fortunately, we've got enough donations that we're gonna make the 33 1/3, and it also is balanced, as you said, over a 5-year period. So you might have 1 year where you get a big chunk of money from a single donor that would violate that 33%. But then when you average it out over the 5-year period, then you fall below. I think I've answered the questions that you were asking, William.
Somewhat.
Yeah, and that's, thanks for saying that, because that is true. Like when you do that 990 postcard, you're not really putting any information on there that would make them come back. You know, there's not enough. But
Does anybody have any other questions?
Is there a limit for what board members can donate if you fall below if you meet the 1/3%?
yeah, you know, board members, if you're a 501c3, board members, they're treated just like any other donor. So you would still be subject to that 2% threshold, but it would not be any different. But I will say, some organizations are organized as supporting organizations, so they're not 501c3. So you might have an organization that formed this other supporting organization, and the only reason that organization was formed was to support that nonprofit. There's a lot of rules about board members giving there. So I doubt you've run into that right now, but I did want to put that little caveat in there. And one other thing I was thinking about real quick, Tracy, I don't know if anybody got PPP funding or not this year, but the IRS is saying, hey, you can count that. You don't have to exclude that as an excess contributor. So I just want to throw that. That's in the instructions. They put that in the 2020 instructions. But
Any other questions?
and I could go all, this is great. I could go all day.
All right. Thank you so much.
Oh, thank you,
Travis.
guys.
Everyone, thank you. Travis.
Yeah, my email's up there. If you guys want to talk, you can call me or email me.
This is great.